This is the video going over the 2025 financing supplements, specifically the Native American Guaranteed Home Loan. So you're going to see that this loan mirrors FHA loan in a lot of ways. So we start at the top of the page with the property identifier, which is the complete mailing address that you will have verified with the U.S. Postal Service, just to save you from an underwriting hiccup. Then it goes on to the legal description, which you will find in the tax records or on the county assessor's website. And then the buyer is going to acknowledge that all explanations, representations, disclosures relating to the terms and conditions of the loan below are the responsibility of the lender and not the seller, the seller's broker, the buyer's broker, or any associated licensees. And the financing supplement is an important part of the contract, and any provisions in this supplement remain with the contract and in full force. So the loan amount for a Native American guaranteed home loan is usually 97.75% of the purchase price. That's one of the benefits to being able to use this loan is the down payment requirements are a little bit less. Instead of like on a traditional FHA, the down payment requirement is 3.5%. Here it's 2.25%. So typically the loan amount is going to be that 97.75% of the purchase price, but not always. So always check with the lender and make sure that you have that amount correct. And then just like on the other financing supplements, there's going to be a lot of things that the buyers are committing to by taking a mortgage out to purchase a house. Within 5 days, they're going to select from either A or B. So we'll talk about B in a minute, but A is that they are going to make application for the described loan. They're going to pay any initial loan fees, which in Oklahoma is typically paying for the appraisal up front. They're going to instruct the lender to immediately begin the loan process, and they're also going to instruct the lender, when applicable, to provide that written statement of conditional loan approval. And if you've watched some of the other videos, we've talked about this before, but that conditional loan approval is where the lender verifies 4 things. And the contract defaults to them doing that within 10 days of the time reference date, but you can make that date shorter or longer. Here I've used 7, just depending on the terms of the contract and what fits best for the buyer and seller. So the 4 things that the conditional loan approval are going to confirm is that the lender has reviewed and approved the buyer's creditworthiness. They know that they've got the income to support the purchase price, and they also know that they've got the funds necessary to close. Sometimes they'll verify the income, but not the funds when they do the pre-approval letter. So this part is really important. They also confirm that the buyers paid the initial processing fees, which, like I said, in Oklahoma tends to be the purchasing the appraisal, because no lender is going to order the appraisal until it's been paid for, because they don't want to be on the hook for it. And then also that the property appraisal has been ordered, and it's happened more than once that we've been surprised we get to a week before closing and found out that the appraisal hasn't even been ordered yet. So it's going to confirm those 3 things, as well as confirming that the loan or this loan is not subject to the sale or closing of any other properties unless that's already been disclosed in the contract. So those are all the things that are involved in option A. B is the buyer can let the seller know within that time frame that the loan terms are not acceptable, and they're going to deliver a cancellation to the seller and get a full refund of their earnest money. Now, if they choose Section A, but they don't do the conditional loan approval, the seller can provide written notice to the buyer that they intend to cancel and terminate the contract. If that happens, the buyer does have 4 days to remedy the situation and get the conditional loan approval to the listing agent or to the seller. But that is an important part of why we need to stay on top of these dates and make sure that we get the conditional loan approval done in a timely manner, is it does give the seller an opportunity to put their house back on the market. And from a seller's perspective, if you're the listing agent, we need to make sure that the buyer's taking the steps necessary to get the loan to the finish line, or else we're not protecting our seller's best interest. So make sure you watch on that. The conditional loan approval is something we get more questions on than anything else. So that's why I keep hammering it in all of these videos. So then in paragraph 2, it goes on to break down all of the costs that the buyer is going to incur as part of this purchase process. So they're going to have to pay their down payment, which we talked about earlier, is 2.25% of the purchase price. They have to pay their first year's property insurance and flood insurance if they're in a flood zone. They have to do the prepaid taxes and insurance deposits to set up the escrow account. They have to pay any interest beginning on the day of closing to the end of the month if you close mid-month. That's why we see a lot of closings stacked on the last day or two of the month. And then any other HUD allowable closing costs, like an origination fee, which is going to vary lender to lender on how much those fees are and if they are even charged. So the Native American home loan does allow for the seller to pay concessions, and that's going to be in paragraph B. The maximum seller contribution is 6% of the sales price, but this is something that you can use as a negotiation tool. So make sure that you don't ask for more than what the buyer needs, because if you ask for too much and you're up in a multiple offer situation, you may end up losing because you requested too many closing costs. So just remember, this is the concessions that the seller agrees to, and then they can't exceed 6% of the sales price. Then with all of our contract pages, we have the buyers and sellers initials at the bottom, just acknowledging that they've seen this page. Page 2 starts with the address identifying the property again. And then paragraph 3, very similar to the FHA loan addendum, where if there's a requirements for repairs in the appraisal, you have 5 days for the buyer and seller to negotiate how they're going to get those repairs completed and paid for. And if they can't come to a written agreement in those 5 days, then the earnest money is returned to the buyer and the contract terminates. Additional provisions. As we've said in the past, we're not attorneys, so if there's any additional provisions that need to be added, make sure you refer to the standard clauses that are provided by the Real Estate Commission, or reach out to your area leader or broker to make sure that the additional provisions are clear and say what you're intending them to say. And then the bottom of page 2, we have the execution of the parties. So this is where the buyers and sellers sign. If there is a counteroffer, the sellers will not sign this page, but they do still initial at the bottom. So the initials at the bottom are regardless of whether or not the seller's in agreement. They sign only if they agree to the terms of this addendum. If not, or they don't agree to other terms in the contract and there's a counteroffer, then they only sign that counteroffer page. And then page 3 is going to look very, very similar to the last page of the FHA financing supplement. As a matter of fact, it starts with the same FHA real estate certification, just saying that there's no side agreements between the buyers and sellers, or between the realtors and the buyers, or realtors and the sellers, or realtors and realtors. All agreements made pertaining to the purchase of this property are all disclosed in writing in the contract and disclosed to the lender. So this is the part that buyers sign, sellers sign, and both agents involved in the transaction will sign as well. And then at the bottom of page 3, we have the amendatory clause, very similar to what we had in the FHA loan addendum. And what this says is that basically just that the house has to appraise for the purchase price. And if it doesn't appraise, then the buyer can cancel the contract and get their earnest money back. So that's just something to protect the buyer from buying more than what the property is worth. And this, regardless of a counteroffer, does need to be signed by the buyers and the sellers. And then one more time, we're going to see that there's initials at the bottom of the page. So that is the Native American home loan supplement.